to TheoTrade. This is Don Kaufman. September 28th, 2021. 16 minutes left inside of the trading session. S&P's down big off some 75 handles right now, 1.7%, but the Nasdaq is what's really taking it on the chin, 2.5% decline. And volatility is just downright on the verge of exploding. We're going to cover that and much more here on this evening's video. Let's get to work with the discussion of volatility. So if you're taking a look at the marketplace right now, you're probably thinking to yourself, well, volatility has exploded. Absolutely, unequivocally not. And I'm going to show you precisely why. Like, we just haven't really seen, if you will, kind of the brunt of volatility. And it's intimidating as can be at this point if you know precisely what to look at. Obviously, everybody just looks at the marketplace and says, yeah, you know what? Look, the S&Ps are selling off here into the close. It's ugly. Listen, we're well off some of the lows of the trading session. Okay, but one of the first things I will point out, once again, and I pointed this out just over a week ago on that Monday where we saw some wild sell side activity. But once again, in today's trading session, this is not the kind of volume that screams capitulation in the S&P futures. At this point in time, to get very specific in terms of volume, we're just shy of 2 million S&P futures contracts trading on the day. Of course, that includes overnight trade. Nevertheless, okay, that doesn't scream like, capitulation type trading. So, all right, that's one factor that I think is a bit of a standout. But again, I kind of want to quantify, if you will, the statement that volatility is on the verge of exploding. And to do that, you'd think, all right, maybe we look over at the VIX. And it's pretty evident, actually, by looking at the VIX, you're like, okay, I kind of get what he's saying. I mean, volatility was considerably higher just about a week ago. But hey, listen, we've actually seen, if you take a look at the S&Ps, okay, and we'll go to the daily again, we've seen this kind of risk. And again, the risk that we saw, okay, last Monday, that was, well, bigger. We actually headed a little bit lower. We touched all the way down to, 4,300 in the SPOOs. That's the S&P futures. We're nowhere near that today, okay? But again, brush all of that aside. The one aspect that just really resonates with me, and I was talking about this about a week ago, is none other than these volatility futures. Okay, the volatility futures just, again, this is incredibly intimidating to me, and I'm going to make, very clear, okay, what is so intimidating at this point in time. First and foremost, and I'm literally going to freeze the screen here and kind of zoom into this for just a second. What we're looking at right now, okay, is the differential between these 22-day, their October volatility futures. The October volatility futures are currently trading at 22.50. Then we're just going to jump out right out here, 50 days out, okay? The November volatility futures are effectively trading right at 23.40. So we're still very much in what we term a contango situation. Again, I froze the screen over here, so we're going to graph this here momentarily so that you can see it. We're going to throw it onto a chart, right? And it's actually what they term a depth chart. But the crazy part of this is there's still like 90 cents of differentiation between, okay, short-term volatility futures and longer-term volatility futures. And yes, I'm comparing 22-day versus 50, which effectively what it says is we ain't home yet. We're not even in the throes of real volatility. What's the throes of real volatility? It's when you see short duration vol actually eclipse longer duration vol. And I got to tell you, there's only handfuls of like retail traders that ever look at this stuff. We're not, again, we're closing the gap a little bit, but as I said, we're not home yet. Like the marketplace right now is taking this much too much in stride. And you do realize that we're facing almost a 3% loss in the Nasdaq. Now, let me actually display this to you. I'm going to cruise over to the charts. Okay, from charts, I'm actually going to hit product depth. Now, product depth, and I'm actually typing in /VX. And product depth, we're looking at futures contracts. I am going to go ahead and change up my curve a little bit. And I just like to click through this once in a while so everybody can see exactly what I'm doing. All we're going to look at is OC, Nov, Dis, Jan, right? So OC, Nov, Dis, Jan. And that curve, and I know it's bouncing around the screen a little bit here, but freeze the screen for just a second. The point that I'm trying to make is this is the October volatility future. Here's the November volatility future. That gap, that differential, that's huge by huge. It's massive for the fact that The SPOOs are off some 2%. Like the bottom line, when you see volatility futures look like this, and this is actually what we call contango, okay? When you see volatility futures looking like this, you think to yourself, oh, it's yawning. The marketplace is literally yawning right now. What do we need to see? Okay, I'll tell you exactly what we need to see. We need to see, well, us feeling the fear. Feeling the fear means these ox got to just get lighting up, okay? They actually got to be up here, and we flip into what's termed backwardation. Okay, and the backwardation is when these ox come over the noves or even over the Ds, all right, in a full-fledged backwardation. And again, if you looked back to the previous Monday, we saw that from a brief and fleeting moment. But again, the marketplace is just taking this way too much in stride. And it's one of the biggest standouts probably of today's trading session that is going to be missed by most. And if you're looking at this, you're like, they're going to come in and they're going to buy the dip. All right. Yeah, we could absolutely see a rip your face off rally. Could be extraordinarily short-lived. Again, volatility is on just the absolute verge of exploding. Let's actually move onward and upward. Next point I want to make here. SPX. So the SPX expected move for this week, and this is absolutely critical, is approximately 70 points. We are outside that expected move. Now, what I'm saying here is plus or minus $70. That's the kind of move that we were looking for. Higher or lower, looking for a $70 move this week. Where are we right now? We're well outside of it. I mean, come on. We've already had like a $92 move today inside of the SPX. But because we're outside the edge of the expected move, it changes in very large part, it changes the dynamic, if you will, of trade. And the dynamic of trade is once you're outside this line, okay, we have to start to dynamically hedge. And that effectively means this line is the lower edge of the expected move. It's almost like a happy place. When we get outside of it, okay, that forces firms, okay, to balance their delta. Okay, at this level, it's not that critical. But once you get outside of it, what occurs is, you can imagine if somebody had gone out there, okay, and they've sold puts, okay, the lower we go, all right, the more positive their delta gets. So how do the trading firms offset positive delta? Okay, how do they offset positive delta? With negative delta. Where do you find negative delta? I have a good way to sell, all right, S&P futures. They'll sell S&P futures. Why do they sell S&P futures? It's just simple math. You sell S&P futures, all right, to dynamically hedge all the positive delta risk that you're taking. Every market-making firm, proprietary trading firm, for the most part, most of those firms trade net neutral. So we get outside the edge of the expected move. They have to sell into selling, which once again makes it an extraordinarily dangerous marketplace, okay, the second we're outside that. Now, that's not to say, could we jump back in the expected move as this week progresses? Absolutely, unequivocally, yes. As I said, there could be a rip your face off rally, you know, and that's that quintessential explosion to the upside. But if you're not seeing that we're on the verge, like there's so many factors here and a confluence of those factors. The next one I actually want to point out over here deals with the dollar. Take a look at the dollar. It's exploding to the upside. This is duck and cover right now. You know, when you look at the dollar and you look at the dollar over the last 9 months, you're like, oh, it broke out to the upside. Maybe it doesn't have that much room until you open up a 3-year chart and realize, behold, the last almost, you know, I guess what, COVID crash time frame here, the entire world moved into the US dollar. And if this is going to get a little bit more serious, you're going to feel the dollar absolutely explode to the upside. So again, as I said, there's a confluence of factors. We have outside the expected move. We have volatility futures that have not inverted. Okay, we have the dollar progressing to some of the recent highs. And again, the last time that we really started rocking and breaking out in the dollar, it was the COVID crash. I mean, and it doesn't necessarily, you know, portend that we're going into an absolute downward spiral, but I'll tell you what, it doesn't help. All right, to compound the issues, what do we got over here? We've got bonds. So bonds are seeing some fairly heavy sell side activity. And of course, bonds could reverse in a moment's notice, but this is a huge catch-22 right now. Now listen very carefully. As the bonds go down, okay, rates, that's the interest rates, are going to go up. Now, let's take a quick glance at the rate before we go any further. Now, the rate we're actually going to look at is the TNX. What does it stand for? TNX, the 10-year, it's the Treasury. We're all the way north of 1.5. We're at 1.53 and change right now. And again, this is something I was pointing out in the weekend update. The last time that we saw this kind of explosion to the upside inside of the 10-year, right, and that was right back in this time frame, tech tanked, okay? But let's just take the other side of this for a second. Let's say that rates, okay, backed off. But if rates back off, then they're going to come after the financials. You're in a bit of a catch-22 right now. The interesting irony, and I'll actually, throw a little extra risk in here. The interesting irony is, even though rates are exploding to the upside, that is supposed to be helping the financials. The financials caved today. The correlation coefficient is rockin' large. What that basically means is no place to run to, no place to hide. If the correlation coefficient kicks in, okay, and you actually have what? You have bonds down, you have financials down, you have monsters of tech down, right? You have dollar up. I mean, where do you go to? Where do you go to when almost every major asset class is down? Somebody goes, you go to gold. You're not going to gold. The dollar is rocking. The dollar is breaking out right now. They're going to sell the commodities. They're even taking down oil. Okay, and there's an energy crisis going on, and they're taking down oil. I mean, even the energy sector, the XLE, is likely to finish this day basically unchanged on the day, which is amazing considering, okay, the range, all right, of the upside move inside of the energy sector. Again, it's kind of a quintessential all-down day. Where do you go, okay, when risk hits the fan? You move to the volatility futures. You move to volatility products. You buy dollar, because I'm going to tell you again, there's no place to run to, nowhere to hide in this marketplace. Again, that correlation kicked in. So at this point in time, if bonds rally back, then they're going to kill the financials, right? They may bounce, okay, some of the technology. But you got to be careful, because bonds right now, this is an absolute tear to the downside, and it feels extraordinarily heavy at this point in time. All right, one of the last points I want to make on this evening's video. Again, you don't get much foresight in markets of heavy volatility. All we know at this point is look at the volatility futures, look for them to flip over. If they get inverted, it's going to get downright wicked. The other aspect, and this one should really resonate with you, and I mentioned this the last 3 weeks in a row on the weekend update, there were 4 stocks that we've keyed into that are absolutely pivotal to this entire marketplace. What are the 4 stocks? We start with Microsoft. Microsoft, huge break to the downside. Look at the percentage loss on here. It's Microsoft, okay? Why is it taking such a large loss? Because it's one of the percentage leaders in terms of the Nasdaq. If you're going to hit this market, you're going to hurt this marketplace, you got to go after the percentage leaders. This is the leadership right here. It's Microsoft. Next on my docket over here, it is none other than Facebook. Again, taking it on the chin. Facebook actually hitting some new recent lows over here. What else you got? Google. Okay, Google. All of them that are in play, it's Microsoft, it's Facebook, it's Google, it's NVIDIA, are all taking huge percentage losses on the day. They're actually exceeding the losses of the Nasdaq and actually leading us lower. Look at Google, up from 70% in the year-to-date basis, now only up 57%. And last but not least on my list, of course, NVIDIA, which was up north of 75%, now only up, again, about 58%. But in retrospect, you look at that and you're like, man, these things are taking some serious hits. Yeah, and it's still up 58% on a year-to-date basis. People, again, I caution you, markets, they're just on the verge of volatility breaking out, exploding, if you will. Keep your hands and feet inside of the vehicle at all times. If you're going to sell some premium, do it very, very small right now. If you're going to be trading on an intraday basis, switch to micros. Again, it's getting serious out there. We have a feeling that that volatility not only has to explode, but we have to see volatility futures just get wildly inverted before any of this is going to be over. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.